Hello, hello, hello. This is Carl A. Smith, aka Dr. Cash, coming to you with our bi-weekly stock market analysis for the week of June the 15th, 2020. Let's jump right into the numbers and take a look at what has taken place this week, with the bears definitely getting a nice little kick in the beehive, stepping up and awakening them after multiple weeks of just nothing but the bulls taking control of the overall auction, with significant declines across the board, all major indices. We saw toward the latter part of this week with the S&P on Thursday taking a shellacking, if you will, and seeing significant institutional selling as the S&P was down just above 187 points, but the Dow was down 1,800 points, and your tech-heavy Nasdaq was down almost 500 points on Thursday just alone, coming into the close with significant volume. And the Russell, if we take a look at that, significant declines as well. At the same time, our largest leader on a week over week basis, with the Russell significantly just greater than 9%, almost 9.25% decline, with a significant range across the board in all indices, but very much high in the US based Russell. So as we continue to look ahead for this upcoming week, there is the question, will the bears take control and continue to control? Maybe, maybe not. So let's take a look and jump right in as always. So let's just jump right in where we always start, with the S&P 500 on the weekly. As we stated in our intro, significant selling this week across the board in all major indices. However, toward the end of the week, we did see a little bit of a kind of a short-term pullback, if you will, that actually may have a little bit of an opportunity for some confirmation as we continue into the front side of this week. However, one of the things we do want to kind of call out is that the market is very random, but at the same time, it is somewhat predictable. Obviously, that's a little bit of a paradox in what we're saying, but it's all about pattern recognition. So for those that are new, we focus on technical analysis, and the charts kind of leave clues, as one of my old mentors always used to say, is the charts leave clues. And it's our job is to try to interpret those clues by providing some type of overall analysis. And that's one of the things that we did this past week, especially on the S&P, and we're able to take advantage of the selling. We couldn't necessarily anticipate it to the exact day, but we got pretty close, and we're able to get some pretty short-term profits. But at the same time, it just reiterates that technical analysis does add in addition to your own analysis, albeit fundamentally or just general anecdotally, for your own investments. However, we're going to focus heavily on technical analysis. Again, if you like what we're speaking about, please don't forget to hit the subscribe button and the like button on the below charts. So let's jump right in with our analysis and see what, try to convey exactly what we saw to try to help you make some better decisions moving forward. So one of the things that we did see coming into the week before last, we did see that we were coming into a range of price that we had hit toward the latter part of 2019, and this could be a potential type resistance area for us. And that kind of gave us a little bit of an alert, and we just kind of went back and take a look at, just broadly, just for our video, there is a little bit of a resistance line that is showcased here in yellow that we did anticipate that we would at least try to touch. It's more of a magnet in regards to price, and ironically that did work out, and we did see some pretty significant selling coming off of news, both from a economic perspective, but then also from a health perspective, that the US may see some additional coronavirus impact, as we do anticipate a larger second wave of the virus. But then also economically, the Federal Reserve indicated that rates most likely will remain the same in near zero toward the latter part of 2022. So the market absorbed that during the day, and we'll take a look at, if we zoom in just a little bit, we'll see that the market did take on this news into the Thursday action, but at the same time, it was an opportunity to potentially get ahead and look for some selling opportunities. So we'll take a look at that. And as we go into this daily, we'll look back exactly where we were seeing that pretty large opportunity for some type of resistance if we come back toward the latter part of the year and kind of just draw it out more permanently on the chart. And we'll see if we'll retouch this as we come into this week as an opportunity. But at the same time, as you can see, pretty aggressive sellers stepped in coming off of this touch here, but then the economic news is really what really drove down our overall selling coming into the latter part of the week. But at the same time, just highlighting a little bit of an example of what we saw in the charts leading up to this. And this is exactly why we were able to kind of take advantage of this overall trend line touch. And as we zoom in, you'll see coming into price action, coming in onto the 8th, we did see that we were coming up to a larger resistance area going back into last year, but then also coming in to the top of the channels where both of these two areas kind of converged, and we were able to take advantage with a couple of short positions, and were able to close those off on Friday as we saw some type of reversal in the bullish nature as volume came into the point of control, which is the highest volume node area over in this chart's example over the last year. And you saw the bulls looked at this as an opportunity, but then also coming into our 200 daily moving average as an opportunity to step in from the bulls perspective. So we do anticipate some type of continuation going into the front side of this week from a bullish nature, which is opposite of what we've seen for the majority of the trading day on Thursday and Friday. But we do anticipate the bulls to kind of step in a little bit and at least try to retest this high from Friday. And if we do that, we do see some opportunity to continue on at least up until at least this midpoint here, roughly about $315 as an opportunity for a secondary target. So we'll see what happens. Obviously, everything depends upon both the economic news as well as the health news that is coming out of the environment. But if we snap back to the weekly, we do identify this is an area where we could see some continuation upward as we are hypothesizing, given we've come not only off of our 200, but then also onto our 50-week moving average as an opportunity to test the bottom of this channel. And if we do get back inside the channel, I do anticipate this secondary movement upward. So our hypothesis is bullish to sideways for the S&P coming into the front side of the week. Now, as the Nasdaq, we did see some pretty significant sell-offs, but ironically, in comparison to our other indices, the Nasdaq, which is heavily weighted with their technology stocks, continues to outperform the S&P from a yearly basis that is actually still very positive. And you can kind of see over the last few months, coming off of our large sell-off, we have seen this downward action and then pushing up much greater than our previous highs. So we want to watch this continuation. We also saw a failure of that after we reached our all-time highs this past week, and we've come back into the range. So we do want to watch if there will be some bullish continuation, or similar to the S&P, will we go horizontally for the remainder of the month. Now, the bulls were looking for an opportunity. As we zoom in at least to the daily a little bit, we saw an opportunity where the bulls did reach their all-time high and then looked at this as an opportunity for a sell signal coming in. But at the same time, we did see very heavy engagement on a bullish nature, roughly right at the 20 period moving average. In this example, it's the daily moving average that did provide us some very solid support and a pushback of price back into range, which is a slight bullish indication, at least for the first few days, barring something dramatic that may happen over the weekend. There always is that risk. So there is something to take a look at from a positive nature, and it seems that the market is very much relentless from a bullish perspective, irrespective of what news and what economic news that does come out. So we do hypothesize from the Nasdaq perspective, we do see a little bit of a bullish continuation as potentially just moving sideways into a nice little trading range, as we have identified a little bit of a box here moving forward. But we'll see how this pans out, but we'll mark it up and see if we can get back outside of this past week's range. If we do that, watch out for the bears. There'll be a pretty quick and aggressive short covering as we move in to counteract this higher volume that we have seen over the last week. Now, if we jump over to the Russell, as we stated earlier, the Russell did see the largest sell-off in comparison to all of your majors, and we do see a nice outside week where price action did see a higher high in comparison to the previous week, but then also did see a lower low. So this is an opportunity where both sides of the auction are looking for fair prices and trying to determine who can control the auction moving into the summer months. So obviously the Russell is very much weighted toward US-based stocks, and the initial information that's coming out, not only from the Federal Reserve holding interest rates, but then also additional fear, if you will, associated with an economic recovery as a result of the coronavirus potentially can be diminished. So you're seeing the Russell take the brunt of that information very heavily. And we do see that there is an opportunity again for some potential acceptance of prices at these levels. And as we dive into the daily, you can see a pretty significant gap. But coming in toward the latter part of the week session, very similarly, we did see the bulls step in, and we have a nice little double bottom here on the price action, which indicates that there have been a few days where the bears were trying to push prices lower, and that price was rejected. So a shorter term bullish nature, and we'll look for this week to see if there's an opportunity to kind of fill this gap that we've seen coming in from the Wednesday's action into both Thursday and Friday as an opportunity for the bulls to kind of close that gap. And if they do that, I anticipate a quick reversal right back up, if not getting back to above the weekly high that we have seen in this past week. So a little bit of uncertainty as always within the market, but as we stated earlier, there is to some degree some predictability and some analysis that you can do on your own. As always, our mantra is it's your money, you should be under your control. These are opportunities that you should take advantage of, given that the market goes up approximately 98% of the time. If you are following key names or you're following the indices, look for those opportunities where you can step in and potentially take advantage of lower prices, very similar to what we saw today. And as we'll conclude over, we'll take a look at the Dow, which was down on Thursday approximately 1,800 plus points. So pretty significant sell-off, but again, we can see a little bit of a trading range that's developing here, at least on the Dow, where we're seeing a good back and forth action and something that could potentially lead us into the front side of the week as a reversal opportunity, very similar to what we've seen in other indices where we're just reversing right back to continue on with this sideways movement as we go into the summer months. So we'll take a look at that, but just want to move into the dailies where you can see just the order of magnitude of that selling that we saw on both Thursday and to some degree on Friday, but supported just a little bit from our moving averages. We did see coming into the Thursday action right off of the open, we did see a quick test of that 200 daily moving average. So those that don't incorporate moving averages into your trading strategy, I would, at least for those that are beginners, and that's intent of our YouTube channel is to help move you up through the stack of education from beginner, intermediate, and then moving on to some more advanced. So I tried to provide a little bit of an example as you continue to understand the markets just that much more, your charts tend to become that much simpler. However, we want to give you those solid building blocks to enable you to be able to move forward in your overall understanding and not look at this as something that you can't master given enough time. So we'll close out this week with take a look at gold, which saw some pretty sizable movements on a weekly basis, and we can see ourselves coming directly into that support zone that we've been tracking for multiple weeks. And what a beautiful bounce and reversal at the support line, roughly about that $159 amount, and seeing a pretty sizable gap up back into range of our longer term balance areas. So both on the gold commodity side, but then also on the indices, there's some indecision on the auction to determine who is actually in control. So we can see multiple months of balance area. If we kind of call it out a little bit here on the chart, we have been back and forth on gold, which showcases some broader indecision, irrespective of the bullish nature that we have seen at least up until this past Thursday and Friday on all your indices. So as a potential hedge, we can see gold coming right back into range. Now, we still continue to maintain our gold positions. From a overall portfolio perspective, we were pretty aggressive in a number of names this week, specifically on the SPY, and we did see some pretty good profits there, but all things could change coming into this next week. But we'll continue to watch and we'll continue to look for opportunities. Please don't hesitate to follow us in our Facebook group. We'll put the link here at the bottom, as well as don't forget to hit the subscribe and like button. Provide some comments. Let us know if you're enjoying what you are seeing. And as with always, it's your money and it should be under your control. Take care.